Everyone. I am so excited to introduce you to our guest speaker today, Marie Poliseno, and I thought I would tell a little story about how Marie and I met. The year was 2003. I was finishing up a 3-year stint as Director of Behavior and Training at the San Francisco SPCA at the time. And at that time, Jean Donaldson's original Academy for Dog Trainers was part of the Behavior and Training department there. And Marie came through the Academy in 2003, just around the time I was starting to think about starting Dog Biz, which was called Dog Tech at the time, because we were watching all of these amazing Academy grads go out into the world and really struggle on the business side of things. And I started thinking, you know, we could do something about that. And so Marie came through the program. We met then. She was, as most of us in this industry, already had a career. She had a career as a high-powered CPA. She was doing corporate work, consulting for Goldman Sachs, that sort of thing, like, you know, real big CPA sort of work, but was really fueling her passion for dogs on the side with a small dog training business. And as Marie also reminded me this morning, when we did launch Dog Biz, then Dog Tech, she was one of our very first clients, so we've known each other for a long time. We go way back. But the really cool thing about Marie is that when she retired from the corporate scene, she did something really cool. She changed tack and came back around to serve this industry. And she decided that the next thing she was going to do was to start a business called Dollars and Cents that focuses CPA work exclusively for small dog businesses. So a really amazing way to give back to the industry. And, you know, something that I think has just been so valuable all along. And, you know, wow, is her expertise needed now. So I can't think of anyone better to guide us through the complexity of the financial side of this moment than Marie. So thank you, Marie, for being with us today. And I will hand it over to you now to give us some wisdom.
Well, Veronica, thank you for that awesome introduction. And yes, we do go back a really long way. And I'll just share with your audience, part of the reason why I started Dollars and Cents was consulting with you. Because I had an idea and I bounced it off you, and you thought it was like an awesome thing to do. And you've been so supportive and helpful through this whole transition from my corporate world to really working with the people that I enjoy best, which are dog people. I have an awesome list of clients and awesome friendships that I've made along the way. So thank you to you too. So without further ado, let's talk about today's topic. I know generally it's not helpful to revisit the past and history, but I think in this context, it really would be helpful to talk about what has come out of the legislation that was passed on March 27th, how that impacts our dog professional industry, and what sort of information, misinformation, and changes that have occurred over the past month that really do have an impact on everyone's understanding of what's available, how they can access it, and what they can do about it now, or is it too late? So I'd like to talk a little bit about what happened on March 27th when Congress passed the bill that allowed for basically 3 things. One was called a Paycheck Protection Program. The second was called an Economic Injury Disaster Loan. And the third thing was an advance. And so as they rolled this program out in a week's time, something that, you know, had never been done in history before, a lot of I's and weren't dotted and T's weren't crossed because they were trying to do this in such a rush. And as a result, it was very frustrating because each day new advice came out, new applications came out, new processes were announced, and it was really kind of from an observer standpoint a bit bungled in terms of the rollout. Yes, it was meant to be incredibly helpful, but what I think it did to a lot of people in our situation and our clients and the people on the phone here is to frustrate them. So let's talk about that first weekend that it was announced that there was going to be help for small businesses. The application on the SBA website was actually called the Economic Injury Disaster Loan, but it had nothing to do with COVID-19 or the legislation that they passed. So people were trying to fill out this application that really had to do with economic disasters as a result of tornadoes and floods and mudslides and all of the other things that the SBA has economic injury disaster loans for. And it probably took the better part of an hour and a half to 2 hours to try and complete the application, which contained a schedule that had no relevance whatsoever. So you were left trying to guess how to fill it out. Then they posted another schedule on not their website, but you could Google it, and it was more applicable, but it wasn't exactly what you thought you would need to provide. So there was this whole scurry of gathering documents, trying to apply, spending hours if you could get onto the SBA website, which was crashing. And so all of that sort of happened between Friday and Tuesday morning of the first time they announced it. Then they came out with another application on the SBA website that had nothing and looked nothing like the ones that had been there the weekend before. And it was a lot easier to apply. And at the end of that application process, there was a question: would you like a $10,000 advance? Well, a lot of people who looked at this, and if you looked at the actual words on the website, looked as if every small business could just get $10,000. It was like, all you have to do is say yes and put in your bank information, you'd show up, and 10,000 bucks would show up in your account 3 days later. Well, that didn't happen. And then they had the payroll protection program. And so everyone who thinks about it, or at least a reasonable person, looks at the title of the program and says, I have employees or I don't have employees. If I don't have employees, this obviously doesn't apply to us. Wrong. But that was never clear. So then what happened over the next couple weeks is, as the banks were empowered to process these loans, the banks didn't have enough guidance from the SBA to deal with a variety of types of customers. So I'm going to talk in a little bit about, there are, in my opinion, 3 pillars of classes of customers that can apply for a PPP. And what the banks were most comfortable with were ones that are in the corporate entity structure standpoint. So corporations, sub-S corporations. They knew what to do, they knew how to apply, and they knew how to process the loan. And the reason they were so reluctant to, grab everybody and process everybody's application, as some of you may have found out, yours never got processed, is because in order for these loans to be granted, let's talk about how it works. So the bank actually gives you a loan. The bank then goes to the SBA, and the SBA has provided guidance as to how to reimburse the bank. The bank then forgives you, the borrower, for that loan. So in order to comply and not feel like they were incredibly at risk, the banks didn't want to make a move until they had nailed down precisely how they were going to get reimbursed from the SBA. As I started out by saying, the SBA rolled this out in a week. There was no way they were going to be able to address all of these issues. And it was kind of like, we'll figure it out as we go along. And that's why things took so long. Along with, there were a number of corporations, you've seen the news, who applied by using some loopholes in there. This was intended for small businesses like ours. It was not intended for, major corporations like Ruth's Chris or the LA Lakers and that sort of thing. But they, of course, were able to comply with what at the time was the given guidance. Treasury then revised that guidance, and they now make it very clear as to who can apply for the loan and how it works. So those were the 3 things that were really available. We'll talk about unemployment separately, but really those were the 3 things that people were trying to figure out, how do I get one of these? So let's talk about the EIDL, the Economic Injury Disaster Loan. What is that? It is a loan that you are applying for from the SBA. So the SBA has always given small businesses the ability to borrow money, but not at attractive interest rates like these economic injury loans are. These are loans that are at 3.25%. No payments are required for the first 6 months, and it goes out to a period of, I believe, 10 years, but I can be wrong in terms of the term. So it's a loan that you can apply for, low interest rate. What would you use a loan like that for? We'll talk about that in a second. As I said, as part of that application, once they got the right application on the SBA website, was a question at the end that says, would you like an advance? And it was $10,000. And if you listen to Secretary Mnuchin, he said, you can get a $10,000 advance and you'll get it within 3 days. Well, nobody got anything within 3 days. And the $10,000 then became not $10,000 for everybody. And what were the circumstances upon which you could get it? Well, it was based upon the number of employees that you had. So you got $1,000 for every employee up to the $10,000 if you had them. And that's what the current advance is at this point. So if some of you applied for that EIDL and you said, yes, I'd like an advance, and you thought you were going to get 10,000 and 1,000 showed up in your bank account, is because you only had one employee per that application. The next thing was the payroll protection program. Well, as I said, a reasonable person would think that meant if I had employees. Well, when it was first rolled out and it was being processed, the business owner really said to themselves, well, that's great. I've really taken care of my employees. They're like family to me. I really want to make sure that they're taken care of. Hey, but what about me, the business owner? I don't draw a paycheck. I'm a sole proprietor or whatever. And we'll get into that in a minute. What about me? How do I get help? And so it wasn't clear that a payroll protection program applied to sole proprietors, even though they didn't have employees. They're considered the employee. Again, even though under the definition of an employee, you get a W-2 at the end of the year, not so under these circumstances. So what were banks comfortable doing? They were comfortable making loans for the corporate clients that they had. They really weren't sure what to do with the self-employed single member LLC client. Really wasn't clear what they were going to be asking for them since they didn't have payroll records. How was that going to work? And then the last pillar were dual member LLCs or partnerships. They clearly had no idea how to deal with the partners of that partnership. Again, not drawing a paycheck. What were we going to ask from them in order to figure out what their monthly payroll was? So it wasn't until literally last weekend that SBA issued guidance with respect to the partners of a partnership, and banks have started to lend now to those kinds of entities. The sole proprietors kind of got lost in the shuffle, in my opinion. You know, the first tranche of money that came out was literally used up within 2 weeks, an unbelievable amount of money. I mean, we're talking, $320 billion. That's a lot of money. And not a lot of it went to companies like yours that have either no employees, a few employees, certainly less than 500 employees for the most part. And so you were kind of thought, well, heck, the money's gone. Why bother? It doesn't apply to me anyway. I don't know how to get it. Nobody seems to be able to answer any questions, so I'll just move on. Well, that's probably not the right answer. And we'll talk about that a little bit in more detail. So let's talk about what those three pillars, the sub-S corporations, the self-employed, and the partners, what they need to be able to provide to the banks and what this PPP forgivable loan is based on. So for a corporation, it's pretty simple. You generally have employees. If you're an S corporation, you at least are paying yourself through a paycheck. So all of your PPP is going to be calculated based upon your payroll costs. What are payroll costs? Payroll costs are their gross wages. So it includes all of the withholding for FICA, Medicare, and your state withholding. And it includes the portion of state taxes that you pay on behalf of those clients. So for the most part, that's going to be your state unemployment. So at a total cost level, you've got gross wages plus state unemployment is your payroll costs. You then look at your 2019 total payroll costs, average it, come up with a monthly average, multiply it by 2.5 times that number, and that's the amount of PPP that you can apply for. Okay, what can I use the PPP for? I have to use a minimum of the amount awarded to me, a minimum of 75% of the amount awarded to me for payroll costs. Up to 25% can be used for mortgage, rent, or utilities. Now, let me just stop there for a second, because a lot of you are home-based businesses, don't have a brick and mortar location. And so when you read that guidance or you hear about it, you go, great, I can pay part of my personal mortgage. I can pay my, my own utility bills with it. The answer to that is no. The concept behind the mortgage, rent, and utilities is for those people who have brick and mortar locations, and it is their business mortgage. It is their business utilities, not that's associated with your home office. Okay, so I just want to clarify that. So that's one of the stipulations when you get the money. You've got to use a minimum of 75% for payroll costs. The other two things are that when you say 75% of payroll costs, you have to look at the number of employees you had on average during 2019 compared to 2020. Because for each role that you have, ROLE role, for an employee, doesn't matter whether it's Sally or Jane. If Sally worked in 2019 and quit and you hired Jane to take over her responsibilities, it's that role that we're talking about. You have to pay at least 75% of their 2019 wages for that role. So you can't group all the money together and pay, Mary, all of that money as an increase in salary if you haven't kept the same base of employees. So you have to pay at least 75% of your 2019 wages to that person or role in 2020. And you also have to have the same number or average number of full-time equivalents. So a full-time equivalent, for those of you who aren't familiar with that term, is, let's say that your full-time people work 30-hour weeks. Well, you have one person who works 30 hours a week, and you have 3 people, each of whom work 10 hours a week. How many people do you have on payroll? A total of 4. But for purposes of these computations, you actually have 2. The 3 people add up their hours, 10, 10, and 10 equals 1 30-hour employee. So you only have 2 employees. And so you have to keep track of your full-time equivalents between 2019 and 2020. That is the current guidance right now. That is all based on that. But because of the lack of clarity in how the repayment is going to work, I expect that there's going to be future guidelines with respect to how you compute that and what is forgivable. For now, if you don't comply with those 2 things, part of your PPE would have to be repaid. So just keep that in mind. So we talked about the sub-S corporation. They have, W-2s, they have payroll records, and you as the employer of a sub-S corporation should be receiving a paycheck. That's one of the requirements. So if you're not, make sure that you are. And that was pretty clear. The banks knew how to deal with that. Then came the second pillar. And those were the self-employed people, the independent contractors, the gig workers that you've all heard about, and thought, okay, it says that self-employed people can get this PPP. How does that work? I don't have any employees. Is it just for me? And the answer to that question is yes. You are the employee for these purposes. All right, well, how do I figure out what my wage is? Is it based upon how much money I take out of the business every month? Let's call that your draw. No. Draws have nothing to do with it. I don't care if you take out $1,000 a month, $100 a month, or $10,000 a month. That has nothing to do with, is considered your compensation. This may be a little technical, but for those of you who, know a bit about accounting and finances, that is non-taxable income to you. So when they're talking about in the PPP, what is your earned income? You would look on your Schedule C for your 2019 tax return if you filed 2019, if not your 2018, line 31. That line shows you what your net earnings from self-employment were. That's what you earned. Whether or not you took the money out of the company or not, that is what is considered your earnings. You're taxed on it, both for FICA, Medicare, and income taxes, and that is what you're entitled to use for your base for your PPP. You then divide that number by 12 to get your average monthly payroll. You multiply it by 2.5%, and that's how much of PPP you can get. And so that's been really illuminating for a lot of clients of mine and just other people that I've been talking to, because they didn't know that a self-employed person could apply just for themselves. They still thought, I have to have employees in order to apply to this program. The answer to that is not. Okay, so now we got that settled. Tier number 2 has a Schedule C, and it's line 31 that they're dealing with. Let's talk about dual member LLCs, who are partnerships. They don't get a Schedule C. They don't report on a Schedule C. The partnership files its own tax return. So what questions were coming up were, if I'm a partner in a partnership, do I, the partner, apply for the PPP to get my self-employment income? Does the partnership apply? How does that work? And the answer is the partners do not apply. It is the partnership that applies for the PPP, and the amount that is allowable is on each of the partners' K1. So in box 1 of the K1, it's called ordinary income. That's the equivalent of what a self-employed person is showing on Schedule C, line 31. It's self-employment earnings. So they can apply for the partnership applies for each of the partners in the PPP, equal to each of their box 1s minus Section 179 expenses, which for some of you, this is too technical, but it's a way to depreciate things, but you have to subtract that because that goes somewhere else. Then you multiply that number by 92.35%, and it's a function of how much you pay for self-employment taxes. And that's the number that you can apply for. Divide by 12, again, multiply by 2.5. So again, just this weekend, the SBA provided guidance to the banks about who could apply, how much they could apply for, and how it would actually get processed. So hopefully that helps you understand that perhaps you looked into this, during the first couple of days, weeks of the program being announced. You thought that the payroll protection program was only available to people who had employees. And so you walked away saying, no, this doesn't apply to me. Or somewhere along the line, while there was lack of clarity, you might have thought, investigated, and then figured you were rejected from being able to apply for one of these, and then stopped the process. And then they ran out of money. So then you thought, well, forget it. This is never going to happen. Well, since they opened up the new tranche on Monday, they have, been dealing with the backlog of applications that came from the first tranche. And they are now offering more guidance so that people are not, or companies are not inappropriately applying and using up the money. And it looks like, at least from my perspective since Monday, a lot more small businesses have actually been getting their PPPs, where they had maybe applied the first week in April, hadn't heard anything, and now all of a sudden, as money is becoming more available and money is being returned that was inappropriately taken, there is more money being distributed to small businesses like ours. So I have just given you a whole mouthful of information. I think it might just be helpful at this point for me to pause and take some questions so that we can clarify that, and if necessary, continue on.
Oh boy, and we have some questions.
I just see the chat box rolling.
Yeah, I've been grabbing them and trying to get them organized here for you. So The first thing is, I'm just going to ask, we've got a bunch of follow-up questions on the Paycheck Protection Program, the PPP. So if one question, I think you might have covered this, but I just want to make sure, if you do have employees, so if David wants to know if he's got employees, can the PPP also protect his own pay? He says he's an LLC and he's not listed as an employee.
Okay, so yes. So I would assume from that question, you are a single member LLC with employees. So not only are you going to calculate the monthly average payroll for your employees, but you're going to look on your Schedule C, line 31, and calculate your monthly average. That number on Schedule C is in fact your earnings, as if you were an employee.
And what happens if line 31 is 0?
You get nothing. Okay. So let me, that was pretty blunt. So let me sort of explain that. So the whole payroll protection program is basically a way for for the government to say, hey, we want to replace your earnings. They're not in the business of giving you earnings that you didn't have. So if you have a net loss or your line 31 is 0, the government is not saying, hey, let's bump you up and make it look like you made some money so we can pay you. They're saying, sorry, you didn't make any money last year. That person would be best off applying for unemployment, in my opinion.
Okay, great. And you're going to talk a little bit more about unemployment in a bit, right?
Yes.
Okay. So I'm seeing a few questions about the PUA, the Pandemic Unemployment Assistance. Hang on to those because we're gonna get there. Okay, so some follow-ups on PPP and then a few other questions as well. A couple people wanted to know, can PPP funds be used for individual health care premium, not employee health care if they're a sole proprietor or in any other situation?
From what I understand at this point is no. If you are covered by an employee benefit program, that is different. So let's say you set up a group health plan for your business and you were one of the covered employees. It could cover sick time if that was available to it. But from my understanding, it is not to cover healthcare premium costs outside of the business.
Okay, great. Joanna and Sarah and a couple other people have questions about independent contractors. Do they count for PPP or just employees?
They do not count for PPP, and let me explain why. So when you are a small business owner and you're employing, let's say, both employees and independent contractors for reasons that you can have an independent contractor, I'll just qualify that. The independent contractor can apply for the PPP on his own. So you don't get to double count in the universe. The independent contractor applies for the PPP, you apply for the PPP, not including anything related to that independent contractor.
Okay, great. And folks who are, one woman or one man shows, what can they use the PPP for?
Again, it's to replace their net earnings. So provided they have net earnings, you are considered the employee. So you can use that PPP to replace your monthly average net earnings.
And Nicole asks, this is just if you want it forgiven, right? I mean, you can use the money for anything. It's just if you use it for the wrong things, you can't get it forgiven.
That's actually a great point, because it's something that a lot of people don't understand. It's like, oh my gosh, what happens then? It turns into a loan at 1%. Its duration is 2 years. So at worst, you have raised money at 1%. Your monthly payment might be a little bit more than you wanted it to be, especially in these uncertain times. But that's the worst case scenario, is that you use it for that, unless you use it fraudulently. Let me just, sort of make that clear. So as long as you're using it for business purposes, and you don't use it for payroll, or you don't have a business mortgage, rent, or utilities, you got the money as a cash flow injection, then what they're going to do is say, fine, it's turned into a loan and you pay it back at 1% over 2 years.
Okay, great. A couple questions about whether it can be applied to back pay.
I'm unclear and uncertain. Right now, the guidance is that the PPP is to be related to the 8 weeks going forward from the day that you actually get funded. Now, there's some proposals in front of Treasury right now. In fact, there was some breaking news this morning regarding that, is that there is some pleas being made to say, no, it can't really just apply to the day that you get funded because people are still at stay-at-home orders. They can't open their business. So what you're saying is, I have to pay people for doing nothing until the stay-at-home order is lifted. And then when it is lifted, which could be 8 weeks from now, who knows, I have no money to pay my employees. So that doesn't make any sense. There's no matching of timing with respect to opening and when you're paying the employees. So if that's the current guidance right now, I'd have to say the answer to back pay would be no. Yet in earlier guidance, it talked about using the PPP if you had a decrease in revenue and you paid employees from February 15th until some time. But because this is evolving and changing every day, I don't know that there's a clear answer to that right now. And I would expect it's going to change as more of this stuff gets rolled out and more feedback is given to Treasury so that they can provide more guidance on it.
Okay, great. Then we have a number of questions about some other specific things about how it can be used. One is about like utilities. That includes things like, you know, mobile phones used for your business, things like that. And we've got questions about what about home offices that are, you know, that they're listing, you know, against part of their rent or mortgage, that sort of thing. And you know, how do the rules around that work?
Right now, the guidance and how I would advise clients is I would not consider any part of my personal residence that's used for a home office deduction to be used for the PPP to be used for those purposes. I think there's a huge risk right now that that would be recharacterized as personal expenses. You get to write off on your taxes at the end of the year your home office deduction. I would not believe that right now the PPP could be used for any of those expenses. Your cell phone, yes, it's a business use. If you have a separate line in your house for your telephone that is not tied to your thing, yeah, I could see that being a business. Could I see your electric bill? Not really, because it's only a pro rata portion based upon the square footage of the house. And I think you're getting into very dicey areas at that point. And right now it's gray, I'll give you that, but I would not use it for those purposes.
Okay, great. We've also got some questions we've got a number of people who were starting their businesses this year, started, in the first quarter or so of this year. How does all this apply to them? Are they out of luck? Is it just bad timing, or is there something they can still do?
That's a great question. The problem is that they have no substantiation for a prior year to show this as a decrease or COVID related. You know, as we all know, it takes some time to start up a business. I think you've got a longer road to hoe as a new business. I'm not sure of the answer to that though.
Okay, great.
Sorry about that. I just don't know.
Yeah. It is a really difficult situation. What if you hired, so related to that, what if you hired someone in 2020?
Again, I think you're better off in terms of the calculation for repayment if you increased payroll as opposed to decreased payroll. And when I mean payroll, I mean number of people. So if you hired a new person to fulfill a role in 2020, you have an increase, and that's really what they're looking for. What they're trying to avoid is going below your 2019 as your base year in 2020. So they don't want you to use the PPP to decrease the number of people who are covered by it. You have to remember, why did they even come up with this? Although there's 30 million people who applied for unemployment over the past couple of weeks, what they were trying to do is to keep people off unemployment. So that's sort of the reason why they're looking at FTEs from one year to the next.
Okay, great. And we've got a couple people who are feeling a little bit confused about how they can use the money if they're self-employed. It's not, my understanding, it sounds like it's not any different, right? I mean, whether you've got employees or not, whether is there some difference there that people can understand?
No, there isn't. And I thought when we talk about tier 2 or pillar 2, those are self-employed people who do not have employees. All right. Let me split tier 2 into A's and B's. Tier 2A are self-employed people who have employees, and then there's tier B, that a self-employed person who does not have employees. So if you're looking at what is your payroll cost, obviously you can look at what you've paid your employees. Then you want to add to that Schedule C, line 31, which is your net earnings from self-employment. That counts you as the employee for yourself. So you get to add the two of them together if you have employees. If you don't have employees, it's just that number and you're the employee. So you divide line 31 by 12 and that's your monthly payroll cost. Is that clearer?
Sounds good to me. I'm sure people will let us know if not.
Okay.
Let's see here. So one thing I will just say is there are a lot of questions, specific questions about, can I use the money for this? Can I use the money for that? Can I use money for other thing? If you go to the SBA.gov website, they have a list of how you can use it. And so if you have really specific questions, I would go consult that list. Is that reasonable, Marie, rather than?
That is, although it's pretty clear there are 3 things that you can use it for: payroll costs, mortgages, rent, utilities, period.
There you go. Easy peasy. That'll knock a few questions out here. Let's see here. What else have I got? Katie asks, if you fired people in 2020 and your numbers were down with employees even before the pandemic, is that just poor timing? How to work around a situation like that?
Yeah, that is really poor timing. So the whole thing, and one of the attestations that you need to make on the PPP application, is that your decrease in business is directly related to COVID. Okay.
All right. So I know that we've got a couple questions about the EIDL, but rather than me jumping into those, you haven't had a chance to really. Do you want to go ahead and jump into that next, or?
Sure, we can do that, or we can do unemployment, whatever you want to.
Well, we need to do both. So do in whatever order you think makes the most sense. You're in charge.
Okay. All right. Let's talk about the economic injury disaster loan. So I think we said earlier that it is a low interest rate loan that you can obtain from the SBA for COVID-related decreases in business. Now, why would you want an EIDL? A couple of reasons. One, you could have been in the middle of an expansion project for your business that you're pretty confident you'll be able to, stand back up again, and you want to continue working on. It's a great way to borrow money at a very low interest rate to continue with that expansion project. It's also another way for you, if you did not get a PPP, to borrow money for cash flow purposes. I mean, that's what it's for. It's because you've had a downturn in business and you need an injection of cash flow and you don't want it tied directly just to payroll. So the EIDL has a lot more flexibility in terms of its uses, what you can use it for. And people might want to, consider that. What I have found in terms of my experience of people who have applied for the EIDL is that, again, I think there's a lot of confusion at SBA. So people have been receiving notices that says they were approved, here's their SBA number, and then a day or two later, they're getting another email that says your loan's been declined and you can't apply. And no one is actually sure why that's happening, but there's no place that they are getting any information from. I can tell you of all of my clients that have applied for an EIDL, whether the first tranche or the second tranche, no one has gotten any money out of that program. Now, do I think things are loosening up and becoming a little bit more clearer in tranche 2 than they were in tranche 1? Yes, but I don't know that the EIDL program is being supported as well as the PPP. That's saying a lot, because those of you who have gone through the process know it hasn't been easy, and it doesn't appear to be supported in a great fashion. But all I can say is that the EIDL has not, in my experience so far, distributed any of the money to smaller businesses. Everyone who did get an acceptance level has subsequently, within 2 or 3 days, gotten a letter that says it's been declined, and they don't know why. Veronica, did I lose you?
I forgot to unmute myself. I've been muted so you don't hear me typing furiously in the background.
That's okay. Are there more specific questions with respect to the EIDL?
Yeah, so one of them is asking whether, people want to know about grants. Is there some sort of grant aspect to the EIDL too, or is it purely a loan, or are the grants something different? I know you spoke a little bit about that in the last session as well.
Okay, so the first thing that one has to identify is what's the difference between a grant and a loan. So a grant is free money. You don't have any obligation to repay it. A loan has repayment terms associated with it. So the EIDL itself is a loan. It is not a grant. If you look on the SBA website, it says that the advance is a grant. Now, when it first came out, that advance appeared that everyone was going to be able to get $10,000 deposited in their bank account within the next 3 days. And what has transpired is that that grant piece of the, I'll call it EIDL, Payroll Protection Program, together is $1,000 for every employee that you had on the application. So you may have said, yes, I want the advance, or thought you applied for $10,000, and then if you were lucky enough, you got some money deposited into your bank account. Let's just say it was $1,000. That's because you only had one employee. On the SBA website, it says this money will not have to be repaid. I wouldn't believe that verbatim or take that as gospel. It doesn't have to be repaid under certain circumstances, which I think is missing from the statement. So the advance, quite frankly, needs to be part of either the PPP or the EIDL. If you've gone through the application process of the PPP, it specifically says the amount that you are eligible to apply for is minus the advance that you already received. So they're already computing that in the amount that has to be paid back. So it's forgivable under certain circumstances. The other thing that isn't clear is that if you don't get a PPP and you got an advance and you don't get an EIDL either, what happens to that money? And I'm going to say that for the most part, unless you use it for payroll, utilities, or rent, as we've talked about, then it will turn into a loan.
Terrific. Okay. So Wonderful. Hit those ones at the end. What about updating? We have a couple of questions about people who are wanting to update either an existing PPP or EIDL application that's already in the queue. Do you have any advice about that?
So it's really difficult to find out where you are in the queue because the SBA doesn't give any information. Your bank probably is not giving you any information as to where you are. What I can tell you is that as a result of the first tranche running out of money after 2 weeks, there was a backlog of applications which are now being processed as part of the second tranche. Over the weekend, the SBA gave guidance to all of the banks that they could submit in bulk 15,000 applications in one go. Well, when they opened up at 10:30 on Monday morning, by 10:35, the system had crashed because there were too many applications coming through. So what they've done is they've actually limited the bandwidth of the pipe that each bank can submit applications through at one time. So they're timing the gating of the application process, and they're also timing how many can come from any particular borrower in an hour, in a day. So it really depends where you were in the bank's submission queue to the SBA. Remember, the process is that you apply for a PPP at the bank level. The bank then goes to the SBA and asks the SBA to sort of guarantee the loan, to provide the ability for them to give the bank the funds to be able to give you. So it's a multi-tiered layer process, and not every bank is following the same guidelines because they have their own risk management teams that say, here are the situations under which we will lend money. While the SBA is telling them that they guarantee it, banks' experience with the SBA is if they don't follow every item to the letter of the legislation, then they may not get reimbursed. If they don't get reimbursed, they've made a loan to you. Now they're on the hook. So it really depends where you are, in the status of your position at that bank, what the bank's rate of submission to the SBA is. And one thing I'll just like to pause here and talk about, we've heard a lot through the news that some of the big major money center banks catered to, first, it was only clients who had a business checking account with them and a business credit relationship with them, that those were the ones on the top of the pile. If you had a business checking account with one bank in particular, but you had a credit card with another bank, they weren't taking your application. I've talked earlier about the banks being confused as to who they could take applications from. So in one case, my client tried to apply for a PPP. They didn't know how to deal with them as a sole proprietor, so they wouldn't even take an application. And so one of the things that I've advised all of my clients to do, and I'd encourage all of you to do the same, is that you develop a personal relationship with a banker in your community, whether that be a community bank, a credit union. That's not to say that you can't develop one with a big money center bank as well. It just might be a little bit harder. Once the lobbies open and your stay-at-home orders have expired, I'd encourage you to call your bank, make an appointment with the relationship manager, sit down with them, get them to know your face, get them to know who you are, so that in the event something like this happens at some point in the future, God forbid, you at least have a person. You've got a face to go to, you've got a name, you've got a number, they know your face, and it's more likely that you'll get personal attention as opposed to just being a number in some online application forum.
Terrific. Okay, so let's see here. I've got a few questions. Now that we've talked about PPP and EIDL and unemployment, I've got some questions about, sort of double and triple dipping. Can you talk about, Maria's asking, can you talk about the relationship between getting an EIDL and PPP and getting unemployment for yourselves or employees. Nicole was wondering about whether if you get unemployment and the PPP loan and you don't use the PPP for payroll, then, can you pay it back as a loan? And just kind of all those sort of mixes, how does it work? How do you choose which one to do? And what if you're trying for a bunch of them, and, just how does all that work?
Well, it's as clear as mud to begin with. So if it sounds like it's confusing, it is. Let's just talk about what I do know for a fact. So EIDL, if you get an EIDL and you get a PPP, you have to roll the EIDL into your PPP. You can't have both. You can only have, if you have a PPP, your EIDL has to go in there because there's a stipulation that you can't have more than one loan at a time. Okay. So whether you get an EIDL or a PPP, to me, the question is, do you want to have to repay the money back, or would you like to get free money? That to me is the question there. If you can use the free money for the appropriate purposes, I think you're always going to be better off taking the PPP versus the EIDL, but it does really depend on your own facts and circumstances and your own financial situation. Unemployment and how that affects the PPP is really, really unclear. So as most of you know, every state has its own unemployment sort of guidelines and requirements and attestations that you need to make when you apply for unemployment. Right now, the federal government is saying if you're a self-employed person and you haven't had the ability in the past to collect unemployment because you were self-employed and you didn't get wages per se, we'll now give you $600 a week until the end of July. Okay, that's nice. If I applied for a PPP as a self-employed person and they award me the PPP and I use it for my net earnings, how do I answer the question on the state application website that says, did you earn anything this month? That is a question that I think you need to ask your states. How am I supposed to answer that? You could, create a number of different scenarios. It says, yeah, the PPP reimbursed me for compensation lost. Did I get paid? I don't know. Does that constitute wages or not? It's really unclear. And I suggest that you approach the Department of Labor in your state once, the number of applications for unemployment starts to diminish a little bit, about how do I answer that question? Am I getting paid because I got a PPP, or am I not getting paid? Can I collect both? And I don't know. As I said, you can come up with a number of different scenarios that could justify why you think you should get both, but there may be statutory reasons in your state why you can't. And that's the place to ask, is the Department of Labor.
Well, so since this topic has gotten us onto unemployment, and several people have have pointed out in the chat, we haven't actually done that yet. I think it was still on my brain from last session. What should we know about unemployment?
Patience is probably the key. So Congress, in its infinite wisdom, decided that the fastest way to get money to unemployed people was through each state's unemployment program. Well, perhaps they didn't realize or didn't care to ask, could they handle it? And the answer is every state has an antiquated system for unemployment, and they were not ready to handle the volume of unemployment claims that came in, nor the new requirements that would have to be programmed to allow payment to individuals who would otherwise not have been entitled to unemployment before. So I think in the last session, I mentioned a friend of mine said she got an inquiry from a state unemployment agency asking if she was willing to come back to work as a COBOL programmer. I'm going to guess that many of the people online today don't even know what that is. That's how old these systems are. And in the programming language that was used to develop them so many years ago, it's taking every state a really long time to be able to come up with the software to process these, as well as to handle the volume once it comes in. So Patience is really important. I did happen to just glance over at the chat thing and says the EDD CA website for unemployment keeps crashing. That's because they just opened it up for the self-employed people, and the volume that's going through is incredible. What I have found is in most states, they are making it retroactive back to April 3rd. So regardless of whether you can get in today or not, doesn't box you out of being able to collect unemployment. But that will, again, depend state by state and how that works. Is it a good idea to collect the unemployment? If you can make the certifications that you need to, that you're not working, or that if you are working and that you haven't been compensated, and you can make those, and $600 a week is something that you feel comfortable collecting, then go ahead. What I would say is that this impacts both you and your employee. So I've heard from a couple of my clients who were actually awarded PPPs. They've offered their employees their jobs back, and they're not $100,000 plus roles. They're more like the $30,000 a year positions. And the employers are saying, thanks, but no thanks. I can make more money on unemployment. And that is a fact. That is happening. So it really depends what your employees are looking for, how that plays out, and being able to re-offer them the jobs. And it also plays a factor, and that's why I think more guidance is going to come out later, about how the PPP is used. What if I offered all of my employees their jobs back and they all said no? Now I only have 8 weeks to recruit people who aren't qualified to do the jobs that I had, qualified people to do before. It doesn't make sense. So that's why I think more guidance is going to be coming out on that. So in a nutshell, unemployment, it has been very difficult for the self-employed and independent contractors to actually access. Will they be able to? Yes. Will it be retroactive? Depends state by state. Sorry about that.
Would it be a dog seminar if we didn't have at least one dog bark in the background? It wouldn't be complete.
Well, there you go.
So we've got some questions about just wanting to confirm that a solo person can apply for unemployment.
That is absolutely correct.
Excellent. And also some questions around under what circumstances they can apply for unemployment. What if they're still working? What if their numbers, their revenue is really down, but they still have some work coming in? And then a second version of that is, what if they're working, but they don't have any revenue? So they're doing, office work and things like that, but revenue is not coming in.
So again, on your state unemployment application, it's going to ask you questions like, how many hours did you work and how much were you paid? If you weren't paid for any hours, then I guess the answer to that question is 0, but you'd have to ascertain that you were actually answering that question appropriately by talking to the Department of Labor in your state. So unemployment also works on partial unemployment benefits. So if you were an employee and you applied for unemployment, you have to deduct the amount of wages and hours from the total amount of your maximum benefit to get your weekly check. They haven't identified what that is for federal unemployment purposes. Again, they're kind of thinking of it as they go along. Right now, I would suspect that you would report 0 earnings and get the full amount. If you reported to them that you got paid, I don't know, $100 that week, would they deduct $100 from your $600? Would they deduct some portion of that? I don't know. In general, state unemployment takes into account partial benefits and partial wages. I don't know how they're administering the federal piece of that.
Okay. And unemployment is, so so I think there's been a little bit of so unemployment is for covering lost income, right? I mean, and then how you then use that money is up to you, because it's
That's right.
So
Unemployment is unemployment, right?
Yeah.
So if a self-employed person isn't getting paid, then they are unemployed.
Perfect. And then Maria says, what if the business there's money coming in, but you haven't paid yourself because you've been using that money, like to pay the rent and, other expenses in the business. How does that impact all of this?
Remember, a lot of people who are self-employed think the money they take out of the business is what is considered their wages. It is not. That is a draw. A draw is not what you consider for unemployment or PPP. So let me give an example. Let's say I took in $1,000 in revenue during the month. I spent $1,500 in expenses, paying utilities or whatever for the business. So I have a loss for the month of $500. But some of those expenses, I didn't have to use all of my cash. So I had cash sitting in my checking account, and I decided to take $300 out of my checking account during that month. For unemployment purposes, your income is zero. It's negative. It is not $300. $300 is a cash flow concept. It is not an earnings concept.
Okay. So we are getting down to the wire here. So I have two last questions for you. One is, everyone wants to know what kind of dog you have barking in the background. That's the easy question.
A demand barker, who I have well trained to do that. He is a Portuguese water dog.
Very good. The last question is, what are your parting words of wisdom? What do you want people to, there's so much information and we're recording this, people can go back and get some of the details and whatnot. But if you were going to say to people, walk away with this, two parting thoughts, what would they be?
Don't take no for an answer. Continue being persistent about being your own advocate. So you may have had a thought, a distorted thought or judgment about whether or not you could apply, whether or not you would get any money, whether this applies to you or not. My advice to you is to continue going after it. The money is still there. It is still available. And I think this second tranche is really going to help small businesses like us. So please don't get frustrated. Please don't get discouraged. I still think there's really good help out there in terms of cash flow. And I want you to go out there and get it. So I really just encourage you to be persistent. If you've tried, or you said, I put in an application, a month ago, I haven't heard anything, I guess I'm not going to get anything. That's not the attitude to have. The attitude is, it's here to help me. Let me access it and go for it. And if that means applying at 8 different places, apply. It's worth your time.
Wonderful. Thank you so very much. And I know that you, I can see that you've taken your glasses off. And so I know that you're probably not really seeing what's happening in the chat pod, but just people are thanking you and really appreciative of all of the expertise and wisdom. Thank you so much. In fact, we've got a few requests for whether we could talk you into coming back in a couple of weeks. And so we'll stay in touch. I don't know. I'll do my best, everyone. I'll do my best. Thank you so much. And all of you stay safe out there. We'll get the recordings up as soon as we can. And we'll see you again on Tuesday for regular sessions. Thank you, Marie.
Thank you, Veronica. And thank you, everybody. Stay safe.